Hello and welcome to another update video about SEI. SEI shows a bit of a pullback today in line with the broader market, with the entire sector. Everything's pulling back a little bit, probably driven by Bitcoin to a degree, but it's the overall sentiment that affects today the markets. We've seen a little bit of a dip in the stock market as well, and that could be related to a degree to the normal volatility that occurs around the Fed day, the interest rate decision, completely normal. I mentioned to you yesterday that we have to prepare for wave count changes in this move to the upside because I did not believe the aggressively bullish count. So it has indeed morphed and transformed into what could be described as a diagonal pattern. We're going to take a look at that in a minute. Other interpretations are of course possible. We are going to talk about that. But overall, looking at the bigger picture, the structure is completely unchanged. So that hasn't changed at all. The idea is still that we have two wave counts. One is a little more bullish than the other one, but at the moment they are both bullish, and I'm looking for higher prices against the 44 cent level on the larger time frame. So zoomed out, the 44 cent level is the main support. That is the 50% retracement of the rally that started on the 13th of December. And that's very relevant. Now, okay, as long as we hold that level, at least one more high is expected in the yellow count, which is an A, B, C structure. And the C wave is a 1, 2, 3, 4, 5. In a more bullish scenario, we are filling in the white count, which is the same structure, but we just simply add another 4, 5 pattern to it. And that would also have long-term bullish implications. For now, we need to see, first of all, if our micro support level is holding, or let's say generally the support area. And then the question at the moment that we're dealing with is, has this fourth wave in that C wave or wave 3 actually formed a low? Yeah, and we need to watch for a first impulse to the upside. We haven't got that. So it failed to push higher more directly. Instead, we are now dealing with corrective mass to the upside, so that increases the risk of a breakdown again. So it's just what happens here typically in a fifth wave. Obviously, it's a fifth wave. The idea is that a third wave top tier, A wave down, B wave up, C wave down. I currently assume that the fourth wave is finished. But if I was giving you probabilities, I would say the probability for a move back into the orange support area has slightly increased, because what I had labeled as a 1-2-1-2 setup here has now morphed into a possible diagonal pattern. Let's examine that a little bit. So looking at this structure here, we still have a potential 1-2 setup after the wave 4 bottomed in our target area there. And the question is, what is this? And it looks a bit like an ABC structure in wave 3. If I talk about Fibonacci extension, if I check them, then we can see that, here, the third wave there reached perfectly the 1.38 extension. It's typically micro resistance in such a move. I have to assume that this topped in an A, B, C structure in wave 3. We're now in wave 4, but it needs to hold the current micro support. That's between 64.9 cents and 71.2. Next support level, because we're already at 68 cents, the next support is at 66.8 cents. And yeah, as long as the next two support levels are holding, at least one more high would be needed to suggest that the fourth wave indeed has bottomed. Because what looked like an aggressive bullish count morphed into a diagonal, which is always questionable. At the moment, 3 waves up, could easily be an ABC, could break down again. But because this structure to the downside looks complete in wave 4, I assume the low is in. In the worst case, it drops back into the support area, and the wave 4 never finished, the larger wave 4. And we have to find another support level for it, and there are other support levels down there. But then it would morph into a WXY structure. Okay, so that wouldn't be unusual. But as I said yesterday, I don't believe the more aggressively bullish count, so we have to prepare for micro count changes. So if you want to ignore the micro counts, the chaos, the noise, you simply focus on the 44.2 cent level, because that's the main support where the bullish scenario overall on this chart gets seriously challenged. and trading on the long side will get increasingly risky. That's my update about SEI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.